Twardowski here. I'm super excited to be able to get on and talk about my favorite product that we carry, being the Americo Eagle Premier. But before I get into kind of the nuts and bolts of how it works and how I use it, I want to explain a little bit how I preface my appointments, so to make it really easy to transition to using Americo later on in the appointment. So when I first sit down with our clients, I pull out two things. I pull out a financial inventory sheet, and I pull out what's called a client credibility sheet. And the credibility sheet basically shows all the different carriers that we work with, or at least the main carriers that we work with on there. So I show that to the clients. I say, hey, I work with Family First Life. We're here for final expenses or mortgage protection, whatever the case may be. So we're going to handle that, but we also do retirement income planning and just normal life insurance. And then I pointed on there, I'm like, these are the main carriers we represent. I'm sure you recognize a few of them. And a lot of people, will be like, oh yeah, I recognize John Hancock, Mutual of Omaha, or I live in Denver now and there's a massive, Transamerica building downtown. So a lot of people are like, oh yeah, I've seen Transamerica before. I'm like, yeah, that's great. So, just so you know, one of our platinum partner is this company, Americo. And the reason for that is they're the largest privately held insurance company. They do a really good job of paying out the claims quickly, and we work with them on a regular basis. So they're very easy for us to work with. And they also carry the best products. So, hopefully you'll be able to qualify for something with them today. So I just plant that seed early on before I even go into the appointment. But then I explain to them I'm going to go through this client suitability worksheet and shop around for you guys, figure out what the best fit's going to be for you to get you guys some sort of protection today. So I go through, the financial inventory sheet, and that's not necessarily the part I want to talk about today because there's so much, really good, strong training on that sort of stuff. So once I figure out their health and what the client may be eligible for, so say it's a mortgage protection appointment, right? And I sit down with the client and I understand that they're 70 years plus old. They have some health concerns, and that they're not going to stay in the house, right? And that they're going to try to sell the house and move. What I'll do is I'll start introducing the concept of buying time. And I'll say, hey guys, if you're like most families, mismarried, there's, when Bob dies, you're going to downsize this house and you'll live somewhere that's easier to take care of for just you. Does that sound about right? Or if they have a kid, and I'm like, hey, I'm sure kids aren't going to move here. They're probably just going to sell the house when you pass away, right? And they'll be like, yeah, absolutely. So, okay, so what we got to do today, this actually be really simple. What we're going to do today is put something in place for you. It's going to go ahead and make sure that when you pass away, your spouse has, or your kid has 6 months to 12 months to maybe 2 years of the mortgage payments in place, so that the loan will not get foreclosed on when you pass away. And then I'll explain, the cool part about this is by the time we leave today, we're going to know whether or not you're able to get approved or not. And they're like, oh, okay, that's awesome. So, and then I tell them, so when I do leave, you'll have coverage in place and you won't have to worry about it or think about it again unless you need me to, update your policy, decrease your policy, whatever the case may be. So I explain that, and then I go into showing them the pricing. And when I price out Eagle, especially for the mortgage protection appointments, I show, I usually start from the very top. So say the client's mortgage payment is $20,000 per year is what they pay into the mortgage. So I would show them, 30,000, 20,000, and 10,000. 30,000 being enough to pay the mortgage for a year and a half, 20,000 being enough to pay the mortgage for 1 year, and 10,000 being enough to pay the mortgage for 6 months. And below that, I write, so 30,000, below 30,000, I write 60,000. And then next to that, I write, accidental death. So I explain to them, hey, so this is $30,000 if you die of any sort of death at all. But if you happen to die in any kind of accident, the death benefit actually goes from, 30,000 to 60,000. So just meaning if you had this set up to pay for it for a year and a half, but you died prematurely or earlier than you thought before the principal of the mortgage was paid down more, your kids would actually have $60,000, which would help them, to make sure that they could pay for it for a full 3 years, or it gives them a little bit extra time to figure out what to do with it. Does that make sense? And they'll be like, oh yeah, it does. And then I write below that 90,000. And I do that just because the Americo has the triple indemnity. So if you die in any kind of common carrier, like a bus or a plane or anything like that, so it'd be like very prematurely, like some kind of crazy freak accident, then the policy would actually go from 30,000 to 90,000. And then I just, again, break down how many years that would buy them if that sort of thing happened. And I do that typically for, like, in this scenario, for the 30,000, for the 20,000, and for the 10,000. And then I just slide the paper over to the client and say, hey, which one of these makes the most sense for you? Go ahead and take a look at it. While you're doing that, I'm going to go ahead and get this application started just to make sure that we know you'll be able to get approved for it. So while they're looking at it, I already have their driver's license in front of me, and I start filling out the application. And when I get to the pricing point, they tell me which one they want to do. So just very assumptive. Hey, we're going to go ahead and get something in place for you today. It'll be issued by the time I leave the house. That way it'll be covered when I leave, and you don't ever have to think about this again. And most people really like that, knowing that they don't have to worry about this over and over again. So jumping into final expense, which is where I use this product even more, because obviously with some of the mortgage appointments, we'll go ahead and use the HMSs or other term products or Universal Life to cover that. But since I moved to Colorado, I used to run a lot of mortgage protection, but I've really transitioned to running 80 to 90% Facebook leads. And so I just want to kind of break down how I use the same product in my Facebook appointments. So I start off the exact same way, where I talk about, these are all the carriers we work with. This is Americo, explain Americo again. This company is the largest privately held insurance company. So, while you may see Mutual of Omaha or John Hancock or Transamerica on buildings or golf bags or TV commercials, Americo puts all of their resources back into making their products the very best. So if you're lucky enough to qualify for one of theirs today, we'll go ahead and put you with them. And I think in the beginning, then people are hoping the entire time, to ask me at the end, hey, can we, are we able to do Americo? Which is just a good segue, good clean segue, because most of the time I'm able to approve them with that. Another question I ask, early on in my final expense appointments is, the first thing I ask is, have you guys had someone pass away recently, or did you just decide this is something you wanted to go ahead and, get in place before it was too late? Either way they answer it, I'm good. A lot of people will tell me, hey, we just had someone pass away, or, which is great, and I can work with that. Or no, I just realized, that I needed some insurance. Or if people tell me, I've applied for some insurance in the past and I wasn't able to get approved, it's kind of where I like to be able to bring up Eagle. I'm like, okay, cool. Well, we have this one today. If your health is good enough, we'll go ahead and try with that one. It'll actually tell us right here and now during our appointment if you're approved or not. So you won't have to sweat, underwriters checking it and taking a long time to get back to you if they're going to be able to approve you. And people really seem to like that, especially in the final expense market. They just kind of want you to get in, get out, be really direct with them and help them out. And then when I'm going through final expense as well, I always like to ask people, like, other than just covering your final expenses, what other debt are you going to leave behind to your family? If you passed away yesterday, what does this look like for you? And it's just a good segue to leading into, getting a little bit bigger final expense policies. So a lot of people will tell me, I just wanted to cover cremation, but then I also do a full financial inventory sheet with them so I can figure out, if they have other debt left behind, if they have a mortgage, if they have a car payment, if they have credit cards, whatever the case may be. And just adding all the extra stuff in allows me to really make the accidental part of the Eagle policy a lot more valuable, if that makes sense. So when I get to the end, maybe they told me, hey, I have about $50,000, worth of debt total, and they needed their funeral covered, but they didn't want to leave that stuff behind for their kids. I'll say, okay, perfect. So this is kind of what this is made for. So you have, right here, you have $25,000 of natural death. So whenever you pass away, and you're in great health right now, but whenever you pass away, this money is going to go, probate and tax free to your children. But you mentioned you had all this debt that you expected to be paid off in the next 5 to 10 years. The cool thing about this one is it's kind of built for that. So if you pass away prematurely, it would likely be from an accident. If you died the next year or so, right, Mary? Yeah, that sounds like that'd probably be the cause of it. Okay, cool. So this is sort of made for that, because if you die prematurely, it actually doubles and goes from 25,000 to 50,000. So if you die in any kind of accident, it'll actually make sure that debt's all paid off. And then if you die later on in life naturally, this will make sure that your kids have enough money to pay for the funeral and, you leave a little bit extra for, for kids, grandkids, and some sort of legacy behind. So they have something to remember you by. Does that make sense? So that's kind of how I build extra value with the accidental death and explain, it's kind of something else to help them make sure that if they were to pass away, that all their debt will be covered from it. And I do the same thing with the final expense appointments. Early on, I always like to ask, who do you guys bank with? And I think something I've noticed, now I have all the new agents we work with do that. I say, just ask them who they bank with. Because when people were asking, hey, do you use a Direct Express card or bank account? They were getting a lot of Direct Express cards, but ever since the people started asking, hey, who do you bank with? They get a lot less of that, which is obviously good because Americo does not take the Direct Express card. The other important thing I wanted to mention about Americo is the quit smoking, incentive they have for the Eagle product. So if I ever run into someone that's a smoker, say it's a husband and wife and the husband smokes, I'll ask them, hey, do you have any plans on quitting smoking? And the wife will usually be like, yeah, I've been trying to get him to quit smoking for years and years. I'll be, okay, cool. This is going to be, an awesome incentive to help you guys quit smoking. We actually have a product that will allow you to have a non-smoker rating. And as long as you quit smoking, the premium will stay at the non-smoker rating. So I know you've been trying to get him to quit for about 20 years. This will be a really good incentive, Bob, for you to quit smoking. So the example I'm looking at right now is a 60-year-old for $10,000, right? So his initial monthly premium would be $49.67. And as long as he quits smoking within the first 4 years, he gets to keep the $10,000 for the $49.67 a month. However, if he doesn't quit smoking after year 4, then the base amount will either drop to $54.36 or his premium will go to $88.17. So the premium just about doubles if they decide not to quit smoking. So it's it's awesome because there's no other company out there that will allow us to be so competitive with smoker ratings. B, everyone who smokes know they need to quit smoking. And C, going from $49 a month to $88 a month, I usually break that down for them. So hey, Bob, so as long as you quit smoking, you'll save yourself $39 a month. So that's almost $500 a year. So add $500 a year plus whatever you spend on cigarettes, you could take Mary on a pretty nice trip, right? And then by that point, the wife or the kid or whoever else is there, or if it's just a single person, they're thinking to themselves, oh, what can I do with all that extra money? So the non-smoking thing is very valuable. I always do make sure to clarify and ask, hey, do you plan on quitting smoking? If I get people that tell me that they're not planning on quitting smoking, I go ahead and do a different product with them because I don't want them to have, the non-smoker rating for 4 years and then their premium will get jacked up. So I will go somewhere else if they tell me they have no intention to quit smoking. But if they do, and most people do have an intention to quit smoking, it's a pretty large incentive for them to stop. Excuse me. It's a large incentive for them to quit smoking. And it also gives them saves them a lot of money than what they would be paying compared to other carriers. So I think that's about everything I had wanted to cover for this. If you guys have any additional questions, feel free to reach out to me. It's a very simple product. It doubles if it's in the event of an accident. It triples if it's a common carrier. It's a whole life product, so the premium stays the same forever. The death benefit stays the same forever. So they don't ever have to worry about the price going up like you would see with like a AARP policy or some sort of increasing term policy. It's locked in until the day that they die. And then obviously the quit smoking incentive. So as long as they quit smoking within the first 4 years, they get to keep the non-smoker rating, which is great because it encourages our clients to quit smoking, meaning that they'll live longer. And it also saves them money on their monthly premiums. So hopefully this helped, guys. If you're not selling Americo, oh yeah, one other thing. This is a business too. So it's important to realize, like when you're out seeing clients, if you don't get paid, then you can't go see more people and help more people, right? So make sure you're selling Eagle, rather than trying to nickel and dime and save $1 or $2, present value, show the people that you're there to help them and you're going to be there to help their policy get paid out when they pass away for their kids or their spouse. Because at the end of the day, they're buying you, so it's not going to help to save $1 or $2. And Eagle will pay you out quickly so that you can stay in business, make sure you're able to fund your business, buy more leads, and at the end of the day, help more family with a really awesome product. So I hope you all have a great rest of your day. Feel free to reach out to myself or anyone at the corporate office if you need any further clarification on this product. Thanks.